Earnings season has just kicked off, and it's a great time to check in on companies and see how they're doing. Let's do that on the Weekend Review.
Okay, so let's talk earnings season. But first, you might be asking the question, why even care about earnings season at all? Well, one of the reasons why we care about earnings season is that a stock isn't just a ticker with a price attached that goes up or down. It's a business. It has revenues, it has costs, it has profitability. And one of the things that we've learned over time is that the stock market tends to track the trend in what's happening with corporate earnings. What I'm showing for you here is 10 years worth of history. And I have the S&P 500 in light blue, and I have the earnings per share in dark blue. And what you notice is, if you look at both these lines, they tend to follow the same sort of track. We start low, we have a peak, we enter into a trough, then we re-accelerate, and then we put this little cup in the end. This is the S&P 500 over the last 10 years. And if you look at the earnings of the companies in the S&P 500, you see that same sort of trend. We start low, we accelerate to a peak, we fall into a trough, we re-accelerate, and then we put this little cup in at the end. And so what that does is that tells us that there's clearly some relationship here. Stocks tend to move as a function of their earnings power. A more profitable company theoretically is worth more, and that expresses itself in the market through higher stock prices. So we care about how much money companies are making. The nice part is companies will tell us 4 times a year how they're doing. Now, before we jump into the earnings season themselves, let's look at what are the expectations for earnings. This is the next 12-month earnings per share, and this is a little tough to read because this is looking 12 months into the future, but let me walk you through what this chart is telling us. The expectation for the market was to have earnings rising very aggressively all the way through 2022 until about the third quarter when earnings would start to turn down. And the bottom in these earnings, so this is inflation pressures, labor costs, supply chain issues, all that sort of stuff that we lived through. And the expectation was sometime between maybe September, October through January of this year. So essentially right now, we're expected to bottom in terms of earnings. And then as we start looking forward into 2024, earnings are supposed to aggressively accelerate again. Now, we're going to learn about this aggressive acceleration. We'll see if that happens in future earnings season. That's going to be 3, 6, 9 months from now. We start to learn about that. What we're looking at for this earnings season is we just want to get sense of, have we hit the bottom? Are earnings going to stop coming down? Have we hit this bottom, and can companies start to earn better profitability from here? So that's our expectation. That's what we're set up for. What's the data been? Well, it's still early, so you don't want to jump to conclusions here. But essentially, 6% of the S&P 500 has reported, so that's about 30 companies, and 84% of them have delivered an earnings beat. 66% of those that have reported have given a revenue surprise. Now, the way you want to think about this is revenue is really, I use it as a read on the consumer, right? There aren't too many things you can do to bring more people in through the door. Maybe advertising and things like that, but really that's a read on the economy. Seems pretty strong. On the earnings side, 84% beating their earnings estimates. That's a measure of business performance. How good of a business operator are you? Are you running an efficient operation? Are you cutting staff that you don't need? Are you getting the right products where they need to go? So this earnings season looks pretty good. There's a lot of beats here. How about the growth though? Are we seeing any signs of a bottom? Well, so far, and remember it's still early, but so far earnings growth is 0.4%. It's not 0, that's not down, it's positive 0.4. And if the entire rest of earnings season were to be this good, it will be the first quarter of year-over-year growth since Q3 2022. So that's fantastic. That's exactly what we were looking for. And companies also tell us a little bit about the future as well. It's what's known as earnings guidance. 4 companies have issued a negative earnings guidance, meaning they expect the future to be a little worse. 5 companies have given positive earnings guidance, meaning they expect the future to be a little bit better. That's about all you can ask for at this point in the cycle. Bottom line, If every week of earnings season, and we're going to look at this over the next 3 to 4 weeks, but if every week were as good as this week, this would be a phenomenal earnings season given what our expectations are. What this means in terms of the market? Well, as I talked about last week, you know what I'm looking for. I'm looking for the market to come down, touch its 200-day moving average, which I think we already got, bounce off it strongly like a trampoline, enter into this testing phase, which is where I think we are now, and eventually resolve higher. And one of the reasons why I expect the market to resolve higher is because earnings season, I expect, is going to be good. I could certainly be wrong, and it's very early to say, so this is not a foregone conclusion, but so far the market seems to be following that exact pattern. And if you haven't checked out my video from Wednesday, you're going to want to spend some time over there as well. I talk about Israel and Gaza, and I talk about geopolitical events and what they mean for the stock market, but I don't think that is going to derail my plan between now and the end of the year either. So, earnings season started off on a good foot. We're going to check up on it every week for the next 3 to 4 weeks until we get most of companies reporting. And until then, I'll see you next week.